Okay, what are Trump accounts? It's a new way to build wealth for your children from day one. For certain eligible newborns, there's $1,000 seed money from the feds available. There is a $5,000 annual contribution limit until they turned 18. The accounts are locked. They're specialized IRAs for children under 18, created last year under the One Big Beautiful Bill Act. Unlike traditional IRAs, no earned income is required, making them accessible for families who want to start saving early. Federal government provides a one-time $1,000 for eligible children born between January 1st of 2025 and December 31st of 2028. Accounts function under special rules during the growth period until a child turns 18, then it becomes a traditional IRA. So the big advantages are tax-deferred growth means investment earnings accumulate without annual capital gains taxes and eating into returns. No earned income requirement during the growth period makes these accounts uniquely accessible for young children. Employer contributions of up to $2,500 annually do not count as taxable income to the employee. Separate contribution limits from other IRAs means family can maximize retirements savings across multiple account types. The $1,000 federal contribution doesn't count against the $5,000 annual limit. And multiple contribution sources are allowed, including parents, grandparents, employers, and charitable organizations. So, who can get the $1,000? First, as I mentioned before, born between sometime in 2025, 26, 27, and 28, they've got to be a U.S. citizen at the time of the election. They got to have a valid Social Security number on file, and they've got to be claimed as a dependent on someone's tax return. Children not born in those years can still open Trump accounts, but won't receive the federal $1,000. This $1,000 is tax-free when deposited, but it creates no tax basis. So when it comes out, it is fully taxable when withdrawn. An authorized individual must file IRS Form 4547 with their tax return to claim the contribution, or the seed money is forfeited. More than 4 million children have signed up for Trump accounts as of May of 2026. The $5,000 annual limit includes all sources combined, indexed for inflation after 2027. These after-tax contributions create tax basis, allowing tax-free withdrawals of contributed amounts. Employer contributions up to $2,500 count toward the limit as a tax-free benefit. All contributions must be made by December 31st. No prior year contributions are allowed. The gift tax issue. The $19,000 annual gift tax exclusion does not apply. A contribution to a child's Trump account does not qualify for the $19,000 annual gift tax exclusion because the child lacks immediate access. Grandparents or contributors making sizable gifts may need to file Form 709 when contributions exceed the annual exclusion. Congress carved out 529 plans from this rule, but did not extend the same benefits to Trump accounts, creating filing burdens. This limitation affects wealthy families seeking tax-efficient wealth transfer, though contributions reduce lifetime estate tax exemption rather than triggering immediate tax. Okay, there's some investment restrictions. All funds in the Trump accounts must be invested in mutual funds or ETFs that track the S&P 500 or another index of primarily American equities. Congress chose low-cost index funds to keep the fees low and the returns consistent, as the S&P 500 has averaged roughly 10% annual returns long-term. The expense ratio cap of 0.1% ensures that over 18 years of compounding, low fees make a meaningful difference in account value at maturity. Parents can switch between eligible index funds at any time during the growth period to adjust allocation or reduce fees further. Withdrawals before age 18 are not allowed except for 3 specific exemptions. If you're rolling it into another Trump account, you're returning excess contributions, or the beneficiary dies. Unlike 401k plans, there is no hardship withdrawal options during the growth period, even for medical emergencies, education, and other urgent needs. Amounts generally cannot be withdrawn from Trump accounts before January 1 of the calendar year, which the child turns 18. After the growth period ends, when the child turns 18, the account converts to a traditional IRA and follows the same distribution rules as other traditional IRAs. Withdrawals after age 18 can be made penalty-free for qualified expenses such as education, first-time home purchase, or starting a business, though they remain taxed at ordinary income rates. The tax treatment of the referrals depends on the contribution source. If it's the individual after-tax contribution, it comes out tax-free, while the employer and government contributions are fully taxable. Basic rule of thumb, tax treatment is if someone paid taxes on it when it went in, they probably won't pay those funds. So you've got to track these stuff that's paid taxes on, because the IRS won't tax you twice on the same money if you could prove you already paid the tax. Individual contributions create tax bases, allowing the original contribution amount to be withdrawn tax-free, while only the investment earnings are taxable at ordinary income rates. These accounts occupy an unusual middle ground, not like Roth IRAs with tax-free withdrawals, not like traditional IRAs with deductible contributions, but better than taxable accounts with tax-deferred growth. So there's 4 parts on the Form 4547. Your info, the child's details, the pilot election, and signature. E-file with the 2025 tax return or mail separately. Be sure you check line 7 to claim the $1,000. So miss that line 7, filling that out right, and you will be sad because it'll be a $1,000 mistake. The form serves 2 purposes. It registers your child for a Trump account and requests federal $1,000 starter contribution. An authorized individual can be a legal guardian first, then an either parent, then adult sibling, then grandparent. You need to submit it electronically through tax software, by mail separately, or through trumpaccounts.gov portal, launching sometime in the middle of 2026. Critical. Check the box on line 7 to claim the $1,000 pilot contribution or permanently forfeit federal seed money. So here's the timeline. Starting January 2026, you can file Form 4547 with tax returns. April 15th is the tax filing deadline for form submission. May 2026, Treasury sends activation instructions to the families. Mid-2026, online portal trumpaccounts.gov launches. First contributions accepted as of our 250th anniversary. Also, the online portal at trumpaccounts.gov offers an alternative for families who miss filing deadlines or have children born later in 2026 or beyond. This thing is best for families with newborns born in 25, 26, and 27, and they're seeking the $1,000 free from the feds. Parents that are comfortable with the mandatory S&P allocation and the 18-year lockup with no early access, i.e. don't put emergency funds in here. Employees whose companies offer Trump account contributions as a tax-free benefit worth up to $2,500 a year. You need to consider alternatives if you need to access these funds before age 18 for education expenses or emergencies. You want more investment control beyond the index funds or prefer international diversification. Gift tax reporting requirements for those exceeding $19,000 creates compliance burdens you'll prefer to avoid. Action steps: review eligibility requirements for the pilot confirmation and verify your child qualifies before filing 4547. Consult with the tax professional about gift tax implications if grandparents or other relatives plan substantial contributions. And set up automatic monthly contributions to reach the $5,000 annual limit while benefiting from dollar cost averaging. Once you graduate, be it from welding school, engineering school, or law school, You're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, am I saving enough and is it in the right place? Glide path to retirement, which I've arbitrarily labeled as the last 10 years prior to retirement. Will the USS retirement be shipshape on the appointed day? Retirement. How do I avoid running out of money before I run out of life? And legacy. That's what I worked hard for, get to where I wanted it to after I'm done with retirement. I can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, click on that schedule appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to my website and click on the YouTube channel button. It's the red one, 2 buttons over from the schedule an appointment button. If your friends or family want more information, they can follow me on Facebook, LinkedIn, or Twitter. Please like and subscribe to my YouTube channel. Those who prefer the good old-fashioned telephone, 518-631-2569. Don't text this number. We'll both be sad because I won't get it. There's a separate texting number there. Opinions in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is hypothetical. There's no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representations made as to its completeness or accuracy. None of this is to be construed or as tax or legal advice. Consult your advisor prior to taking any action. This information is intended to be educational and is not tailored to the investment needs of any specific investor. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a diversified portfolio. Diversification does not protect against market risk. Okay, everybody. Have a great Juneteenth, and I'll see you next time.